Sanjay, good morning. Good to have you back on ET Now. Sanjay, I've been tracking markets for years now.
Thank you.
You've been investing in markets for decades now. But for the first time, I have seen a big divergence. Like I just mentioned, that opinions after Q3 numbers, they've changed 180 degrees this time.
Yeah, I think it's primarily because numbers have been decent. The news flow for the policy front and execution and actual action from the government has been pretty okay. The global environment has stabilized in the last few months. We've had the U.S. elections out of the way, presidential elections, and I think some of the very positive noises coming in from Far East, that's Japan in particular, which has been a cause of concern for a long period of time. And, a good amount of money flows will emanate from that part of the world, going by what the stance BOJ took yesterday. So I think a combination of, bottoming out of the numbers as far as corporates are concerned, as well as reasonably good liquidity is what is showing up in the sentiment.
So, Sanjay, at a time when news flow is strong, policy measures have been initiated, your market view is that the risk-reward ratio is not favorable. Why is that?
Nikunj, primarily based on the fact that, if you look at the numbers, I was just reading this morning a headline on some newspaper which said about $2.7 billion of inflow have come in the last, 2.5 weeks. That's YTD January. And we've had $24 billion of money coming in, last calendar year. Even after, say, this month's 2.7 billion, 2.5 billion, the markets are just up 3% YTD in rupee terms, and Sensex is still underperforming most of the Western markets, forget some of the Eastern and the emerging markets. The problem is that we're getting a good amount of supply now at the current levels from some of the smart money who bought at the lower levels, one. Second, from the larger insurance companies. And added to that is the skepticism and, in fact, no interest coming in from domestic retail investors. A combination of these is what is really holding back the market. And this needs to turn around. And what is really worrying me is that the phenomenal supply we've seen in the last few months from some of the larger insurance companies, in fact, from the largest insurance company who's been continuously selling for the last few months. Till we do not have the reversal, till we do not have the demand-supply equation kind of turning favorable, I think the risk-reward for equities in the short term is negative. And whatever we've seen, the rise right now in the index is primarily concentrated on a few scripts which have been, kept going up, and we've seen this 1,000-odd point rally in the last few months. So I think we are getting set for a sell-off. Beyond a point, supply won't be absorbed, so the market will crack in the short term.
That's interesting because there is some opinion about how the market could see 6,100, 6,200 perhaps before the budget, and then if the news is not good, we might see a sell-off. Sanjay, you do not concur with that opinion on trend?
I think we'll see a sell-off much before the budget. I don't think that, in fact, budget plus minus would be around sometime, would be the kind of peak for the market for the rest of the year maybe, because most of the news flows would be positive and discounted in the price. I think what one is just waiting for in the next week, 10 days, is the RBI stance on 29th of this month. If we do manage to get a 50 basis point, or if we get a 25 CRR, 25 repo, we might see that last kind of, gasp in the Sensex and the Nifty. But on balance, I think markets are not looking good right now, because what's clearly pointing, what I said are real numbers, that we've got such phenomenal inflows, but supply is just overwhelming. Retail participation and negligible or zero still. And domestic money is just not coming in. There isn't enough trust and faith in the domestic investors to come in and invest.
Portfolio strategy, are you taking some chips off the table? Because I remember when we interacted in the month of October, you were all in. Are you booking some profits?
Yes, Nikunj. I'm pretty clear that wherever the valuations are stretched, wherever the numbers are not going to catch up, like we've seen HUL as the example here, there are a lot of pockets which are stretched at this point of time, particularly in the defensives. Not only are they stretched, they are over-owned also. So therefore, demand-supply mismatch also exists. So I am taking money off the table in such kind of stocks, and I'm looking for opportunities elsewhere, because it's all a stock-specific market that's going to be for the next 10 to 12 months. It's not going to be a market betting on the Nifty or the Sensex and making money.
Last time you had indicated to our viewers that you were bullish on power utilities, and especially private power utilities. Is that trade still holding on?
Yes, that optimism carries on because we haven't seen the price reflecting the fundamentals that are starting to change on the ground. There are some policy action triggers that are in the pipeline, particularly with terms of fuel linkages and output pricing for the industry, which is going to fall in place in the next few months. And those triggers will lead to, a re-rating in the entire sector, and we will get a short-term rally also. So I think that sector is in for a good opportunity ahead. So every dip is to be used to buy into them.
Energy, oil and marketing, oil and gas, as well as exploration and refining stocks?
That continues to be my favorite for the year. Government is very aggressively sorting out the policy problems that's plaguing the sector with regard to oil and gas pricing, with the bottlenecks, the NELP clarity, etc. I think we would see a lot of action there. Energy security, energy reliance, those kind of issues are long-term issues. But yes, one may not see too much happening in the immediate short term because we've already seen some of the key pivotals in that sector run up huge. But I think from a 12 to 18 months perspective, that sector still got potential. In the short term, yes, positives are in there. They may have run up. We may see consolidation correction. But I think there is opportunity in that sector from a little longer term, ignoring the next 2-3 weeks or maybe the next few months.
Right, I believe you had a call on Reliance 6 months back as well, Sanjay. What's the view now that the stock is past 900?
I maintain a positive bias on the stock. Of course, I have positions in there. I've had positions in there which I've kept very clear and disclosed last time also. And I think that stock has a long way to go in terms of price valuation mismatch. I think at least for this calendar 13, that stock could be the outperformer in the frontliners.
And an outperformer level would be like 1100 plus? What would be a target there?
Yes, easily. I think 1100 plus is achievable in this calendar year.
Sanjay, so in terms of a sectoral allocation, where are you convinced of allocating, let's say, 7 to 8% of your total portfolio? Which are some of those key names?
I think without getting into names, Nikunj, you know my bias and I've publicly aired it. I'm inclined towards financial services because over the next 12 to 18 months, I think there's a lot of potential in there. One is pricing in too many negatives with regard to bank, NBFCs. The regulatory framework there is rapidly changing. We've got a discussion paper out on the NBCs. We've got banking license news coming in. And one thing that's very clearly coming out with all policy pronouncements from the finance minister and the other people is that they need to talk about financial inclusion. They need to execute financial inclusion with this UID scheme and direct cash transfers falling in place over the next year or two. Is going to lead a real explosion in banking services and financial services. So I think that's the theme where I would like to allocate, in fact, more than 7 to 10% of my portfolio from a longer term perspective.
Sanjay, a word on NBFCs. If I look at most of the NBFCs, Bajaj Finserv, or for that matter, any of the oil NBFCs, gold NBFCs, all of them are trading at a price to book of more than 3 times. Isn't that expensive?
Yes, it is, Nikunj, but that price to book of 3 times is indicating the potential and growth ahead. I'm not advocating that one should just jump in the next 5 minutes and start buying any of them, but one needs to really look at some of the companies which are still grossly undervalued and hold a lot of potential here and have the ability to scale up nationally and not necessarily in just pure commercial finance or building a lending book, but ones which have diversified exposure across, insurance, across other sectors also, are more in the nature of holding companies which will unlock value over the next 12 months. I think there are a few of them there, and those will offer tremendous potential because insurance, in fact, all forms of financial services, things like insurance, etc., also will offer lots of opportunities ahead in the next 12 to 18 months, and that market is definitely going to get much more deeper and much more wider across the nation. So I think that's the space to really focus on if one needs to, look at some high risk, high gain kind of opportunities.
Sanjay, final question. You tracked the entire ADAG group pack with the magnifying glass. Out of the 4 large ADAG group names, which is the best one?
I think I'm clearly biased towards Reliance Capital, which you could clearly make out in my previous discussion that I was having with you just now. It's a diversified financial services company, trades just about 1.25, 1.5, I think, book. A lot of value unlocking, a lot of aggressive work is going on in there. So that would be my favorite, followed obviously by Power and Reliance Communication, because I think that's one group to really watch out for in the next 12 to 18 months. Yes, I've been wrong on that group over the last few months. A lot of things have gone wrong there. Things have got delayed. Execution issues have come up in some businesses. But I think looking ahead, there is tremendous amount of value and opportunity there for investors to study the balance sheet and study the group and see where they can make money.
All right, Sanjay, thanks very much for joining us.